Alan, let me jump to you. And the behavior of the market right now is encouraging if you're a bull. But we talked about lava bubbling up just beneath the surface. 10-year yields moving higher. And suddenly, some people are rushing to gold, which we haven't seen. It's certainly not even last week.
Well, I think that gold is a delayed reaction. Last week we had obviously extreme volatility and gold did not react. But what we did see was a little bit of flight to the dollar as a reserve currency. So that is what kind of tempered the gains in gold. Now the dollar is resuming its overall downtrend. But let's talk about what happened today. This in the market is reflation. We're seeing stocks, bonds, gold, and oil all move higher here. So you're seeing reflating of assets have been beaten down. Now, I'm an old grizzled trader, but I've talked to the older grizzled traders, and they're afraid of 1970s type
Don't
inflation.
take Teddy's shot
Let's
right
not
now.
go there. Let's not go there. All right, we're nowhere near 1970s. we're coming up to 3%, and you're talking about each basis point like it's a threshold.
Yeah.
You know, yes, interest rates are going to go higher, but I think the big equalizer that no one talks about is the internet. The internet is going to depress prices as it has. It puts competition in everyone's hands for everything. So I'm not worried about inflation in the big picture, and either is the market if you look at the market action today.
Teddy, today is almost over. What about
Almost.
tomorrow? If we get a very hot producer price index number, where do you expect to see sectors jolted or rocking and rolling?
Actually, today is really interesting, Liz, because we got that number before the opening, 8:30. The futures nosedived. You know, it looked like we were going to have a horrendous day, and we've rallied out of that hole. And obviously, we're trading, at or near the highs for the moment. And it very well could be that whatever shocked the market last week, good news was bad news for the market last week. I would have thought that good news would have continued to be bad news for the market today, but clearly it's not bad news. Good news seems to be good news, economically speaking. And, perhaps what we saw the last 2 weeks has literally been priced in. And there's just a different threshold for the inflationary pain, if you will, and the prospect of higher interest rates, which the Fed is telling us is coming anyway.
Yeah.
The real issue is how fast and how high.
Well, we've certainly climbed out of last week's hole. And no, I don't think Alan called you old, Teddy. He was talking about other traders.
I feel pretty old.
Good to see all of you. Mark,
I'm old too,
thanks for
Teddy. I'm old.
Mark's like, I'm not saying anything. Great to see all of you. Happy Valentine's Day.
Happy Valentine's Day to you.
Adore you guys. Okay,
Thank
so
you.